friend, let me tell you something straight from the shoulder. In this business of trading, you're not fighting the market, you're fighting yourself. You're wrestling with your own fears, your own greed, your own impatience, and nothing brings those out of hiding quicker than risk. That's why we talk about rules for handling it, because without them, you'll get chewed up and spat out before you've even started to learn what this game is all about. Do you know how many men I've seen wiped out simply because they thought rules didn't apply to them? More than I care to count. They didn't lose because the market was against them. No, they lost because they were against themselves. Now you may think, well, I've got a sharp mind, I've studied charts, I've read the books, I've followed the greats. But let me ask you, when you're in a trade and the ticker starts running against you, do you really believe you'll follow that wisdom you memorized? Or will you hold on, just hoping, just praying, thinking maybe tomorrow will be different? That's where rules step in. Rules aren't for the easy days, my friend. They're for the hard ones. The ones where your gut turns and your palms sweat. They're the guardrails that keep you from steering straight off the cliff. I learned a long time ago that the first rule of risk is simple: never lose big. Small losses are tuition. They're the cost of staying in the game. But a big loss, that's the one that takes you out of the running. And once you're out, you don't get back in. This market has no pity, no memory, no care for what you want or need. It doesn't even know you exist. Do you see why protecting yourself comes first always? You can't win tomorrow if you're broke today. When I was younger, I thought I could outsmart the market. I'd see a setup, bet too big, and when it went against me, I'd add more, convincing myself it had to turn. It's only a matter of time, I'd tell myself. That's the talk of a fool, and I played that fool many times. The market kept teaching me the same lesson until it finally sank in: if you don't respect risk, you're finished. Tell me, would you ever walk into a card game and shove your whole stack in on the first hand? Yet that's what so many traders do every day. Now, let me bring it closer. Imagine you're risking 10% of your account on one trade. Doesn't sound too bad, right? But think about it. You take 10 trades in a row that don't work. Now what's left? Almost nothing. You've crippled yourself before you've had the chance to see your edge play out. Why would you handicap yourself like that? Risk, my friend, is about survival first, profit later. You want to know the truth. Most traders fail not because they can't find good trades, but because they can't manage bad ones. They're too stubborn to cut a loser, too greedy to take a small gain, too reckless to size properly. Haven't you ever caught yourself saying, just a little more, it'll come back? That's the poison talking. That's the whisper that empties accounts. So what's the antidote? Rules. Hard, fast, unbreakable rules. You set your stop before you buy. You know your maximum loss before you enter. You decide how much you're willing to risk, not in the heat of the moment, but in the cool light of reason. And when the line is hit, you get out. No questions, no excuses, no maybes. Do you think I enjoy taking losses? Of course not. But I'd rather take a small, controlled cut than face the butcher's knife. And let me tell you another thing: risk isn't just about losing money. It's about losing your head. A trader without discipline is like a drunk at the wheel. He may think he's steering fine, but sooner or later, he's going to crash. Have you ever noticed how one bad trade leads to another, and then another, because you're chasing, trying to make it back? That's not trading, that's gambling with panic. That's what happens when you don't have rules to hold you steady. Now, think about position size. Too many fellows treat it like an afterthought. They find a stock they like, and they throw half their account at it. That's suicide, plain and simple. The only thing you can control in this game is how much you risk. You can't control the market. You can't control the news. You can't control the crowd. But you can control your bet size. Why wouldn't you put all your discipline there? If you keep your risk per trade small, say 1 or 2%, you can withstand a string of losses and still have the powder to keep firing when the real opportunity comes. Wouldn't you rather fight another day than burn yourself out on a single misstep? Let me tell you a story. I remember a man who was sharp, quick, clever with numbers. He made a killing in one stock, doubled his money. He thought he was invincible. Next time he doubled down, and when it turned, he held on, thinking he couldn't be wrong twice. The loss wiped him out. I saw him years later, and he told me he never traded again. Do you see the tragedy? He had talent but no rules. The market gave him rope, and he used it to hang himself. I've always said, the market is never wrong, your opinion is. You may think you're smarter than the crowd, but the tape tells the truth. And when the tape says you're wrong, your only job is to get out. That's all. Why argue with the price? Why fight the tide? Haven't you ever stood on the beach and tried to stop a wave with your hands? That's what it's like fighting the tape. Better to step aside, wait for the storm to pass, and live to trade again. Another rule I swear by is this: never average down. Never. It's the quickest way to the poorhouse. If a trade is going against you, adding more doesn't fix it just makes the loss bigger when you finally admit the truth. You don't feed a sick horse and expect it to win the race. Why would you feed a losing trade? Yet men do it every day, and they call it strategy. Tell me, would you lend more money to a man who already owes you and can't pay back? Then why lend more of your capital to a stock that's proving you wrong? Risk management is also about knowing yourself. Some men can't stand volatility. A small dip rattles them. Others can watch a big swing and keep their nerve. Which one are you? Because your rules must fit your temperament. If you set stops too tight, you'll get shaken out. If you set them too wide, you'll bleed too much. The art lies in balancing what the market demands with what your nerves can tolerate. Have you ever thought about that, about how much of trading is psychology rather than math? Here's another truth you need to hear. There's no such thing as certainty in this game, only probabilities. Every trade is a bet, and bets can lose. The best edge in the world will still have losing streaks. Can you stomach 10 losers in a row without throwing your plan away? Because that's where most traders break. They don't fail because their system doesn't work, but because they couldn't endure the rough patch. Do you see now why rules are not optional? They're the backbone. I tell every man who asks me, you're not in this business to be right. You're in it to make money. And making money isn't about winning every trade, it's about cutting losses quick, letting winners run, and keeping your risk small enough so the inevitable mistakes don't destroy you. How many times have you heard of a trader who won 9 trades in a row and then lost it all on the 10th? That's not trading, that's carelessness dressed up as skill. And I'll remind you again, capital is your lifeblood. Lose it and you're out. Guard it as you would your very life. Every dollar is a soldier, and you mustn't send them into hopeless battles. Do you want your army wasted on a lost cause, or saved for the campaign that matters? That's the way to think about risk. Let's talk about leverage. Dangerous thing, leverage. It's a double-edged sword. It makes a good trade better, but it makes a bad one fatal. Too many fellows use it like dynamite in a fireplace. Do you really want to build your fortune on borrowed money that can be called away at the worst possible time? I've seen men who were right about the market but still went broke because leverage forced them out before their idea paid. It's not enough to be right, you must also be solvent. You might wonder, how do you know when to take on risk and when to step back? That's where rules about market conditions come in. There are times when the market runs smooth, clear trends, easy to ride. That's when you press. And there are times when it's choppy, confused, dangerous. That's when you sit on your hands. Do you have the patience to wait? Because most don't. Most traders think they must always be in the market, always chasing action. That's another way they hand their money over. Sometimes the best trade is no trade at all. I could tell you about the times I sat for weeks without a single position, just watching. Men would laugh, say I'd lost my nerve. But when the tape lined up, when the move came, I struck hard, and the profit was mine. Waiting is part of risk management too, waiting until the odds tilt in your favor. Have you noticed how often impatience ruins good traders? They'd rather have a bad trade today than a great one tomorrow. And let me ask you this, What's your rule for taking profits? Because risk management isn't only about losses, it's about gains too. Taking money off the table protects you from giving it back. I've seen traders ride a winning trade into the ground because they got greedy. The same discipline that cuts losses must also bank profits. Otherwise, what was the point of the risk? I could go on, and I will, because this subject is too big, too vital to skim over. Risk rules aren't just numbers on a page. They're habits, ingrained deep. They're the difference between a professional and a gambler. And if you think you can get by without them, let me ask, how long do you expect to last in this game? Because the market has a way of finding out your weaknesses, and it'll exploit them until you're bled dry. Friend, let me lay this bare in the way only a man who has felt the market's claws can tell it. Never risk more than you can afford to lose on a single trade. That sounds simple, doesn't it? Almost too simple. And because it sounds so plain, so obvious, most fellows brush it aside as if it were some children's rhyme. But in this business, the truths that save you are always the ones men are quickest to ignore. Do you know why? Because the market makes you greedy, makes you think you're smarter than common sense. And greed blinds a man faster than fear ever does. You see, every dollar you place in the market is a soldier in your army. They go out and fight battles for you. If you risk too many soldiers in one fight, and that fight turns against you, your whole army is crippled. What chance do you have of winning the war after that? You don't. The man who risks too much on one trade is like a general who sends his whole force charging into the first skirmish he sees. Do you think that general wins campaigns? Or do you think he dies in the mud after the first volley? I've watched men throw half their account at a single idea. They'll puff their chests, convinced it's a sure thing. They'll tell you they've done the homework, they know the story, they've seen the pattern. And then the market twitches against them. That's all it takes, a twitch. And suddenly they're cornered, trapped, unable to breathe, because one trade holds their whole fortune hostage. Have you ever felt that kind of pressure? The sort where every tick against you feels like a knife in your chest? That's not trading, that's suffocation. Now let me tell you something else. The market doesn't care what you can afford in your heart. You may think you can stomach a 10% loss on a trade, but when the red flashes on the tape and your account shrinks before your eyes, you'll discover your limit is far lower than your imagination believed. That's why the rule is clear. Never risk more than you can truly part with. If losing the stake puts you in fear, it's too big. If it makes you sweat, it's too big. If it keeps you up at night, it's too big. Do you want to trade with clarity, or do you want to trade with shaking hands and a pounding heart? When I was younger, I thought I could cheat this rule. I'd see a setup that looked so perfect, so certain, that I'd load up heavy. And yes, sometimes it worked, but when it didn't, it hurt bad. Those big hits took weeks, even months to recover from. And that's the cruel thing about outsized risk. It sets you back so far that even when you get back on track, you've lost time, energy, and confidence. Have you ever noticed how a big loss makes you gun-shy? You hesitate, you second-guess, you choke when the next real opportunity comes. That's the hidden cost of risking too much. The fellows who last in this game don't bet like fools at the racetrack. They size their trades so small that any single one of them could fail, and they'd still be in the fight tomorrow. That's the only way to build consistency, protect yourself from ruin. Because the truth is, no matter how sharp your eye, you're going to be wrong. Not once, not twice, but many times. The tape will turn against you without warning, and if you've staked too much, you're done. Tell me, wouldn't you rather keep your powder dry and fire 10 more shots than blow everything on one that misfired? I'll tell you a story. There was a man in the bucket shops I knew. Bright fellow, full of nerve. He'd make bold bets, bigger than anyone else dared, and when they worked, he looked like a king. But one day, one trade, the market turned. He had his whole roll on it. The loss came fast and merciless. He staggered out of that shop ruined, and I never saw him again in the game. Do you know why? Because he put all his eggs in one basket and then stood under a ladder. The market didn't even notice. It just moved on cold as stone while he vanished. Risk is about survival. You can't make money if you're not around to play. So you must build your rules to keep you alive. That means deciding, before you even think about profit, how much you're willing to lose. And that number must be small, not small enough to bore you, but small enough to protect you. 1 or 2% of your account enough to give the trade meaning, but never enough to wreck you. You think 1% sounds too little? Then let me ask, how many trades do you expect to lose in a row? Because strings of losers happen, even with the best system. If you're risking big, 10 losses in a row wipes you out. But if you're risking small, 10 losses sting, but they don't bury you. Would you rather be stung or buried? And don't fool yourself with the thought that you'll never have that many losers. The market delights in humbling men. It will give you a string of losses just to test your nerve. And when it does, your only defense is the smallness of your risk. Without that, you're at the mercy of fortune. And fortune is the cruelest mistress in the world. Let's talk about temptation. Every trader feels it, the urge to swing big. You see a setup that looks so sweet, so sure, and you think, if I just go heavy here, I'll double my account. That thought is poison. That's the gambler's whisper, and it's the ruin of many, because the setup fails, as all setups sometimes do, and your oversized bet tears your account apart. Do you want to gamble, or do you want to trade? Because trading is not about swinging for home runs, it's about steady singles, steady doubles, letting the compounding do the heavy lifting. I'll put it another way. A man who risks small never dies in one day. He can lose, yes, but he loses in slices, not in gulps. He learns from each mistake without being crushed by it. And over time, those small, survivable losses are outweighed by the gains that come when the tape runs in his favor. Isn't that the kind of game you want to play, one where you live long enough to see your edge shine? Another angle you need to understand is the mental side. If you risk too much, you'll trade scared. You'll watch every tick. You'll panic at every wobble. That kind of trading destroys your judgment. But if your risk is small, you can watch the tape with a cool head. You can let the trade breathe, let it develop, because you know the worst case is still manageable. Which trader do you think wins, the one sweating bullets or the one calm enough to follow his rules? And here's the cruelest irony. The men who risk too much often do it because they want success fast. They can't wait for the slow grind of steady profits. But by rushing, by risking too much, they burn out and fail before they ever get the chance to build something lasting. It's the patient man, the one who risks little but risks often, who wakes up years later with a fortune. Tell me, which road do you want? The quick thrill that ends in ruin, or the long road that ends in wealth? I've stood on both sides, friend. I've made reckless bets. I've paid the price. And I've learned that the only way to stay in this game is to never risk more than you can lose. That rule is not just advice. It's the law of survival in speculation. Ignore it, and the market will make you pay with everything you've got. Friend, let me talk to you about one of the hardest lessons a trader ever learns, and one that most never do. Sit out when the market is unclear. Patience, that quiet, stubborn, unglamorous thing, is as much a weapon in speculation as any rule you'll ever know. But tell me honestly, do you have it? Do you have the nerve to sit on your hands while the crowd runs wild? Or do you etch? Do you twitch? Do you feel the need to act just because the tape is open and prices are moving? That urge, that restless need to be in the market, is what empties more accounts than bad analysis ever did. You see, most men believe trading is about action. They think if they're not in a position, they're not really trading. They think the profit only comes when you're buying and selling, never when you're waiting. But here's the truth: the waiting is where the money is made. The tape will have times when it's smooth, clear, easy to read, when trends shout at you and all the signals line up. That's when you strike, and then there are times when it's nothing but noise back and forth, confusion, no real leadership, no clean move. That's when you step aside. But how many traders can really do it? Can you? Can you watch the screen all day and not place a single trade, because the conditions aren't right? Or does the boredom eat at you until you force something? I've said before, it isn't the trades you take that make you rich, it's the trades you don't take that keep you rich. The market has a way of luring you in during the chop, tempting you with small moves, and then slapping you hard for daring to think you saw clarity in the fog. The men who try to trade every wave end up bleeding from 1,000 cuts. The market doesn't punish them all at once, it just wears them down until they've got nothing left. Have you ever felt that? The slow grind of small losses that eat away at your confidence. That's what happens when you won't sit out. There's a reason I say patience is a position. Sitting in cash isn't doing nothing, it's a stance, a choice, a defensive move as important as any buy or sell order. When the market is vague, your best defense is to stand still. You wouldn't march an army into a swamp, would you? So why march your capital into a market that's nothing but mud and fog? I remember times when I'd sit for weeks without touching a thing. The boys around me would laugh, say Livermore lost his touch, say maybe he'd gone soft. But when the tape finally showed its hand, when the market finally laid out a clear trend, I pounced. And the profits from that one strike outweighed all the noise I'd ignored. Do you see the power of waiting? But tell me, could you do it? Could you endure the laughter, the doubt, the quiet, while everyone else played around in the mud? That's what separates the professional from the gambler. Most traders can't stand still because they confuse patience with weakness. They think if they're not active, they're falling behind. But speculation isn't a race against the man next to you. It's not about keeping up with his trades. It's about guarding your own stake until the time is ripe. The best traders don't measure themselves by how often they trade, but by how well they protect their capital when the market gives no edge. Do you want to be busy, or do you want to be profitable? Because often those two don't go together. The truth is, the market spends more time in confusion than it does in clarity. Real opportunities are rare. They come like seasons you can't force spring to arrive in the dead of winter, but men try anyway. They throw seed on frozen ground and then wonder why nothing grows. A trader must be like a farmer, waiting for the right season, the right weather, before planting. Can you imagine a farmer pacing his fields in January, tossing seed just to feel busy? Yet that's exactly what traders do when they refuse to wait. Let's talk about what unclear really means. It's when the tape gives no trend, when volume is thin, when leadership shifts from one sector to another without conviction. It's when every rally is followed by a sudden drop, and every dip is bought just enough to fake you out. In short, it's when the market shows you no reliable path. Those are the days designed to chew you up. You think you see something, but it's nothing but a mirage. Haven't you been there entering a trade, only to be whipsawed out minutes later? That's the price of refusing to wait. Sitting out also demands you conquer your ego. You must admit that you don't always know, that the market sometimes speaks in riddles you can't solve. The amateur believes he must always have an opinion. The professional knows when to keep his mouth shut and his money in his pocket. Do you always feel the need to predict, to act, to prove yourself right? That's not trading. That's vanity. And vanity has no place in speculation. I'll tell you another thing: waiting clears your mind. When you're out of the market, you can see it cleanly, without bias, without the emotional weight of a position. When you're in a trade, every tick looks like a threat or a promise. But when you're flat, you can judge the action as it is, not as you wish it to be. Isn't it easier to see truth when you're not tangled in it? There's also this: patience is discipline. And discipline is the backbone of every great trader. If you can't sit out, if you can't resist the urge to trade just because you're bored, then how will you ever resist greed, or fear, or panic? The man who can't wait has already lost, even if he doesn't know it yet. Now, you might ask, but Jesse, what if I miss a move while I'm sitting out? Let me tell you, there's always another move. The market isn't a one-time show. It will open again tomorrow, and the day after, and the day after that. Opportunities are like streetcars. If you miss one, another will come along. But if you chase every car, You'll exhaust yourself and lose your fare before you ever reach your stop. Isn't it better to wait for the one going your way? And here's the paradox: by waiting, you don't actually miss anything, because the trades worth taking are the ones that practically shout at you, the ones so clear you feel you'd be a fool not to act. Those are rare, and you'll only be ready for them if you've saved your money, your energy, and your nerve during the dull times. If you waste all three on chop when the real move comes, you'll be too beaten down to take it. Haven't you ever noticed that? The big move finally arrives, but you're so tired of losing small that you don't believe in it anymore. So sitting out isn't laziness, it's strategy. It's knowing that sometimes the wisest move is no move at all. It's trusting that the market will reveal itself when it's ready, and until then, your job is simply to protect your stake. That's what patience really is, not passive, but protective. Do you see it now? I've always said, it's not the number of trades that matters, it's the quality. A man who takes 3 trades a year, but chooses the right 3, will often out-earn the man who trades 3 times a day. And why? Because he waits for clarity, for confirmation, for the tide to align with his position. He doesn't splash in the shallows, he sails when the wind is strong. Would you rather row yourself ragged, or set sail when the breeze is at your back? Think on this: the market rewards patience, because most men lack it. The crowd wants action, wants movement, wants excitement, and they pay dearly for it. The patient trader takes their money, not because he's smarter, but because he's willing to wait for the fat pitch while they swing at every ball. Patience is the edge most traders never develop, and yet it costs nothing, only the strength to resist your own impulses. Why do you think so few master it? Friend, you must get this through your head before anything else in speculation. Protect your capital first, chase profits second. Every dollar you lose is a soldier gone, and every soldier gone weakens your army. Without capital, you are nothing in this game. No brains, no experience, no courage can help you once you've shot your last bullet. Tell me, would a general charge into a battle without keeping reserves behind him? Would he spend every man on the first clash? Of course not. He keeps his strength for the real fight, the decisive moment. Yet how many traders do you see throwing their capital at every flicker on the tape, as if they had an endless supply? I've seen more men go broke from carelessness with their stake than from bad ideas. A bad idea managed well is just a scratch. Careless risk, though, can cripple you even when you're right. That's the irony. The market might even prove you right in the end, but if you overcommitted early and couldn't withstand the drawdown, you'll be gone long before your thesis plays out. Have you thought about that? That you can be right and still lose simply because you didn't protect your capital. Now let me tell you something important. Profit is seductive. Capital is boring. Everyone loves to boast about how much they made on a trade. Nobody brags about how much they didn't lose. But do you know which one matters more? It's the money you don't lose that keeps you in the game long enough to collect the money you do make. Loss prevention is invisible profit. Every dollar you protect today is a dollar you can send out tomorrow to fight again. Isn't that the only way to build lasting wealth? Think of trading like building a house. Your capital is the foundation. If the foundation is cracked, the whole structure collapses, no matter how beautiful the rooms look. So what's the use of chasing fancy profits if the ground beneath you is crumbling? That's what happens when you chase money before guarding your base. You may hit a lucky streak, but sooner or later, the cracks spread and the whole thing falls in a heap. I remember a man who hit a hot run in the market. He turned a small stake into a fortune in just months, but he never respected the idea of protection. Every time he won, he pressed harder, doubled up, and left nothing behind in safety. And then, as sure as sunrise, the market turned. Within weeks he gave it all back and more. One day I met him, and he said, "Jesse, I had it all, and I let it slip through my fingers." And I told him plain, "You never had it, because you never protected it." Do you see? Money that isn't protected is money already lost, it just hasn't left you yet. Capital protection isn't just about stop losses, though those are vital. It's also about knowing when not to play, when to keep your chips in your pocket. There's no law that says you must always have a position. Cash is a position, and sometimes it's the strongest one. Protecting your capital means refusing to let boredom, pride, or the fear of missing out trick you into throwing money into a market that offers no edge. Haven't you ever felt that itch, that urge to trade simply because you're watching the screen? That itch is the enemy of capital. Scratch it too often, and you'll bleed yourself dry. The market gives no medals for effort. It only pays for correct action. Protecting your capital means waiting until the conditions are right, until the odds tilt your way, and until you can enter with both confidence and control. Anything less, and you're gambling. And gambling is how men hand their capital back to the crowd. Do you want to gamble, or do you want to speculate? The difference lies in whether you protect your stake. I'll tell you something else: the importance of capital protection grows as your capital grows. When you have a small stake, losing half of it hurts, but you can rebuild.